Okay, great. Thanks for that feedback. So, okay, so let's dive into it. Thanks again for everyone's patience with the technical issues. So, what is an in-plan conversion? So that would be one where, so we're not talking about rollovers into the solo 401k from your pre-existing retirement account. We're talking about different types of conversions. We're talking about, let's say you've got a pre-tax account and a Roth account, and you want to move money from the pre-tax account over to the Roth account. Or let's say you want to transfer money outside of the solo 401k to a Roth IRA. So we're going to be covering those types of conversions. So even though the second category, moving into a Roth IRA, is technically a rollover, it's not an in-plan conversion, there's some similar issues to consider. So, okay, so the first area we're going to review is pre-tax solo 401k to Roth solo 401k. So the first question is that we hear a lot of times is there any type of limit on how much I can roll over? And really, there's no limit. You can roll over as much as you want from your pre-tax sub account to your Roth sub account. And of course, you want to let us know so we can guide you through the process. The deadline to do the rollover is going to be December 31st of the year for which you want it to be effective. So some people at the end of the year, they might be doing some pre-tax work, looking at their the income they're bringing in, their other tax situation, and they may see an opportunity to convert a certain amount of their pre-tax funds over to their Roth solo 401k bucket. So the key is that if you want it to be effective, because that's going to be taxable, as we'll talk about in a moment, if you want to go ahead and pay the taxes on that amount in that year, let's say 2020, you need to do the rollover by December 31st of 2020. There's no withholding required. So it's not like if you're taking a taxable distribution out of your plan where you've got to do a withholding. There's no withholding required, provided it's a direct rollover. So it goes directly from the pre-tax account to the Roth sub account. Like I mentioned, it is taxable. So it's included as income for the year of the conversion. There's no penalty. There is reporting required. So we do handle that as part of our services. 1099-R is going to be required, which we would handle preparing that 1099-R. If you've got multiple participants, let's say you've got a husband and a wife and they're both doing a in-plan conversion, then each person would receive a 1099-R. You have to report this because again, it's taxable income. It's got to be reported on lines 4C and 4D of the 1040. So Schedule 1 of the 1040. In kind, some people do in-kind conversions. Let's say you're invested in a note or you're invested in a piece of real estate. So you can do an in-kind conversion of an asset from a pre-tax account to a Roth account. And so the amount that's reported is the value of the asset. So you need to know the value of that asset. Retitling though is not required because it's still inside your 401k. So the note might be payable to your 401k. It's still payable to your 401k. The real estate might be titled in the name of the 401k or would need to be. It's not going to change though because it's still inside that 401k. Unwinding it, second thoughts here. No, you cannot recharacterize it or unwind it. The process, if we're talking about cash, would be by check. So you would just write a check, from say your pre-tax bank account, payable to the name of the solo 401k, deposit it in the Roth bank account, the Roth sub account, and just write in-plan Roth conversion in the memo. Okay, let's go on to another type of conversion. Now let's talk about an in-plan conversion going from an after-tax solo 401k sub account to a Roth solo 401k sub account. So we'll go through these same topics. So unlimited, yes, you can roll over as much as you want from that after-tax to the Roth account. The deadline is December 31st of the year for which you want it to be effective. There's no withholding requirement. It's not taxable. Now, one exception would be if there's any gains on the money that's in that after-tax account. So if you deposited $1,000, and then if you made an after-tax contribution of $1,000, and then there's a gain on that amount while it's in the after-tax account, the gain is taxable. There's no penalty. Reporting is required. So even though it's not going to typically be a taxable event, it's still a reportable event. And just like with the prior slide, if you've got multiple participants, husband, wife, and each person is doing an after-tax to Roth conversion, you've got two 1099-Rs that would be issued. So you need to list this on line 4C. So you enter the amount of the conversion on line 4C of Schedule 1 of the 1040, but you put 0 in 4D unless there's a taxable gain. In kind, just like before, it would be based on the value of the assets. There's no retitling that would be required, no recharacterization. And the way to do this, the best way to do this is by check, because that's going to help document. You got that nice record of the transaction, and just write in plan Roth conversion on the memo. Okay, so now let's talk about a rollover. So this is not inside the plan. This is actually moving money from the plan outside of the plan to a Roth IRA in this example. So we're going from a pre-tax solo 401k to a Roth IRA. So now let's first go over the restrictions. So generally, you cannot roll over money from your pre-tax sub-account outside of the plan to a Roth IRA unless you're age 59 and a half, or if you're talking about money that you had rolled into the plan from a prior account, like if you had transferred into your pre-tax solo 401k funds from a traditional IRA, you can roll those funds out, even if you're not 59 and a half. So the deadline to do this, just like the other screens, is December 31st of the year for which it is effective. There is no withholding that's required, provided it's a direct rollover. It is going to be taxable because you're going from a pre-tax status to a Roth status. So it's included as income for the year of the transfer. There's no penalty. It is going to be a reportable event also. So just like before, a 1099-R is going to need to be issued to report that rollover to the Roth IRA. So you want to coordinate with us and let us know so we can guide you through the process and capture the information that we would need to issue that as part of our service. In terms of your 1040, you're going to enter the amount of the rollover on both lines 4C and 4D of Schedule 1 of the 1040. If it's an in-kind rollover, here's a difference here. If it's an in-kind rollover, it's based on the value of the assets being rolled over. Here, though, retitling the assets is required. And the reason for that is that it's going outside of the plan now, right? Like before, you might have had an asset inside your solo 401k, and now you're converting it over to your Roth IRA. So it can't be titled in the name of the solo 401k anymore. That the retitling is going to be required. Recharacterization is not allowed. And again, if we're talking about cash funds that are being rolled over, check is going to be the preferred method. In this case, you're going to write the check payable to the name of the Roth IRA custodian. They might have additional special instructions. It's going to be best just for documentation purposes to write in the memo, partial, say solo 401k direct rollover to Roth IRA. To have that good record there. So let's stay on the rollover topic, but let's change it up a little bit. Now we're talking about a Roth solo 401k to Roth IRA rollover. So just like before, you're generally not going to be able to do this unless you're age 59 and a half, or if the source of the money is really a pre-existing plan, like a former employer plan, that then came into the solo 401k. So the money that you rolled in, you could roll out, but money that you've accumulated while in the solo 401k, you've generally got to wait until you're at least age 59 and a half. So the deadline is December 31st. No withholding required, not taxable here because it's already Roth money. No penalty. Reporting again is required. Multiple 1099-Rs if there's multiple participants. You're going to have to list this on the 1040. You put it on line 4C, the amount of the rollover, but 0 in 4D of Schedule 1 of the 1040. If it's assets, again, in kind, it's based on the value. Retitling, just like the prior slide, is required here because it's going outside of the plan. No recharacterization is allowed. The best way to do this is, if we're talking about cash, is by check. So you have that good record. You make it payable to the IRA custodian, the Roth IRA custodian, and then describe it in the memo. So you can see the pattern here. So got another slide here. Now we're talking about, on our last slide, after-tax solo 401k to Roth IRA. Now here, there's no restrictions. So you can roll over as much as you want from an after-tax solo 401k sub-account to and thank you for the questions. I see those coming in. So let's go through this slide and then we'll answer those good questions. I appreciate you taking the time to do that. So just to go through this slide, so there's no limit on the amount of after-tax money that you can transfer over to a Roth IRA. So if you're transferring over, or if you're making after-tax contributions, you can roll it all over to the Roth IRA. The deadline is December 31st, no withholding, not taxable unless there is a gain on the money that accumulated inside that after-tax sub-account. No penalty, 1099-R is required. You're going to enter the amount of the conversion on line 4C of Schedule 1 of the 1040 and 0 in line 4D of Schedule 1 of the 1040 unless there's a taxable gain. In kind, it's the value of the assets. Retitling is required because it's going outside of the plan. No unwinding, no recharacterization, and check again is the best method. So let's go through these great questions. So if a couple did an in-plan conversion from a pre-tax solo 401k to Roth solo 401k of $200,000 in 2019, would that prevent them from getting the coronavirus stimulus check? Great question. So honestly, I don't know the answer to that question. I know that there are income limits on who can qualify for that check. Off the top, I would say it looks like that would probably put you outside of being able to receive that check, because I think it is a function of your income in 2019. So I would say that would probably preclude you, but it would be best to check with your tax advisor on that one. What's the best practice? We have another one here. What's the best practice to convert company match non-Roth money to the Roth account? Employee contribution is Roth, employer is non-Roth, both in the same checking account. So and then we got a follow-up from the same individual. Is it better to have two separate checking accounts for the solo 401k? One for employee contribution, another check Roth, another checking for employer non-Roth. So good question there. So certainly let's start with the separate checking account point. So if you have somebody that's making a Roth employee contribution, and then they also, so we're assuming here it's a solo 401k, you can have multiple types of contributions. You can have employee contributions, and we've covered some of these in prior presentations. So if people want some more background on that, but you got employee contributions, employer contributions. Employer contributions are always pre-tax. Employee could be pre-tax or they could be Roth. So you always need to keep the Roth and the pre-tax in separate buckets. So it's definitely, that answers that question. So got it. So I think the concept here is that I'm assuming that we're talking about a scenario where the person has a solo 401k, they've say maximized their employee contribution to the Roth account, then they have made a pre-tax employer contribution to their solo 401k. That's gone into the pre-tax sub account, but they want to get that money, transfer that money from the pre-tax sub account over to the Roth sub account. So that you can certainly do that. So let's go back to because really what we're talking about here is just the pre-tax to Roth solo 401k conversion. So let's go back to that slide. It's going to be helpful as we analyze this. So it's unlimited, number one. So this person can roll over as much as they want. They can make their employer pre-tax contribution to the pre-tax sub account, and then they can roll it all over to the Roth. So that pre-tax contribution, if they set the plan up in 2019 or before, they could be making the pre-tax employer contribution for 2019, as long as they made it by their tax deadline, including any timely filed extension. So they're reducing their 2019 taxes, right? But they do the conversion in 2020 by moving that money then from the pre-tax sub account to the Roth. So they've effectively moved, instead of paying taxes on that money in 2019, now you're paying taxes on 2020 in 2020 as a conversion. Hopefully that answers your question. So we got another question. Thank you. So if the goal is only to move after-tax money from a Schedule C biz, is it acceptable to have just an after-tax solo 401k and immediately move those assets to a Roth IRA? So thank you for that question. I think I understand where you're getting at. So I think the idea here is, if I were to rephrase your question, just to make sure I'm understanding it, is it acceptable to only make after-tax contributions and then immediately or shortly thereafter move over the money to a Roth IRA? So it is acceptable to do that within the confines of the contribution rules. So of course, you've got to be able to justify those after-tax contributions. Like we talked about on this slide, I pulled this slide up now, there's no limit on the amount of money that can be transferred from your after-tax sub account to your Roth IRA account. So thank you for that good question. So please don't hesitate to ask more questions. We've got more time here. I'm happy to field them. And just to preview it, we're going to be doing more of these webinars here shortly. We've got a few that are being teed up. And so again, like I said at the outset, thank you so much for joining, and please subscribe to the YouTube channel for more, for future notifications. Thank you so much, everyone, for joining, and you guys stay safe and have a great day. Looks like there's no more questions, so we'll just end it. Thank you.